Hi, everybody. It's Alex Jarett. Welcome to another edition of Technology Executives Review, video show and podcast. This is me again, Alex Jarett, your host and founder of both Technology Executives Club and our show, which we call Technology Executives Review. Happy to have you here. And don't forget to watch all of our videos at technologyexecutivesclub.com. And you can listen to our podcast on Spotify and Apple. It's called Technology Executives Review. And we got a new YouTube channel that we just launched. We're starting to load up all the videos there as well, and it's under the name of Technology Executives Review. Today's topic is AI data and the financial industry. We're not going to cover the entire industry. We don't have time for that, but we will cover a couple of the main segments of the industry. And I want to introduce you and thank ahead of time, first, Prabir Chatterjee, who's the CTO at SPAATech, a company called SPAATech, and was previously head of data for Spencers Gifts, as well as previous to that, Serva, and has done a lot of other great work in the data and AI area. So Prabir, welcome.
Thank you. Glad to be here.
Glad to have you here. He's a pretty good pickleball player from what I could see. And then Tom Drez, many of you in this region already know Tom. Tom's a great guy. He's also on the board of advisors of our group, but also SPAATech. And he's the former CIO of a company called Christian Brothers Services, which is, Tom, this is in your wheelhouse, this whole topic of financial services, right?
Good morning. Yes, I think so. Insurance and financial services. Good morning.
Glad to have you here. So let's get right into it for you all and everybody else. And the way I broke up these questions, just have some couple general questions, and then we'll just go over use cases. Does that sound cool for you guys?
Absolutely.
Yes.
Okay, great. And I did have a little help from our good friend ChatGPT on some of this stuff when I was looking. So if it's hallucinating, be sure and tell me. So financial institutions. So what are the major challenges that financial institutions face when integrating AI and data solutions into existing legacy systems? That's a good question. And how are these challenges being addressed?
You want me to jump in, Prabir?
Yeah.
You want to take
this is your area. I think you probably are more familiar than me.
This is a gigantic question, right? This could be like the $1 million question. Actually, probably a multi-million-dollar question. So I don't care if you're talking about banks, banking, investments, insurance, and insurance could be healthcare, property, casualty. Toss in retirement systems as well. I think this is what everybody is trying to figure out because you can look at it two ways, right? The first is a lot of companies out there have the philosophy to buy instead of build, which is a fabulous philosophy. So if you're going to buy, all right, so the companies that you've partnered with to make your software, the question is, what are they doing, if anything, with AI, and how will they deliver that to you? And what types of controls are you going to have over it? And even though you're probably paying a gigantic annual software support and maintenance fee, is AI going to be included in that? And you will get those features, or will your software provider just make those available to you as an additional option, which also means additional cost? So that's just the buy side of this. If you
wait, let's just focus on that for a second.
All right.
Okay, come back. I had never even thought of that, but of course that is what they're going to do. And of course that's what it's not like all of a sudden AWS, everything else shows up. Oh, you got all the room you want for free. You're right. Of course that's what they're going to do.
Right. This is not an incremental upgrade feature, by my looking at it. So it could totally be an add-on because companies, the vendors who are making the software, they're going to be toting the cost savings, the productivity improvement of your employees, and potentially at some point, the speed of your customers to get what they want to get, and maybe even chatbots in the future when we want to put AI chatbots in touch directly with the customer. So your vendors are going to be making the case for, hey, we're going to deliver this to you, and you're going to save so much money and improve your services so much that we can't just give this to you for no additional charge.
Yeah. Plus, it actually does cost them to provide this to them.
Absolutely. This is big, and I think a new area for everybody.
Yeah. That's an interesting. Prabir, you want to add anything to that part?
Yeah, I think from the buy side, definitely we look for all the advantage AI can bring in,
Uh,
which we definitely would be looking at that at the same time, looking at that how relevant the data they will be using it inside the organizations. So that would be the critically challenging time for every organizations. As you know, that most of the financial institute, they are so much diverse and so much disintegrated across their different landscape. So for having those informations collectively showing up through these AI implementations, which they are going to buy, and are they going to give the proper return or proper information back to the people who need it? So that will be a biggest challenge. I would see that buying or building and adding the add-on in AI into their application portfolio.
so the return is what you're talking about. Is this thing going to give a return to everybody, to these institutions? So it ties in with what Tom was just saying. It ain't going to be free to just add all this on. And you're saying the challenge is going to be the return. Am I hearing that right?
Yes, return in both return and the security challenge, those two.
Right. Well, and that's true with any software you're going to buy, right? You're going to get a proposal from your vendor. They're going to tout all these use cases, all of these savings and productivity improvements. But then after it's installed, the vendor's not really on the hook anymore. It's up to the company, the purchaser, the acquirer of the software to actually implement it and ensure that you get all the benefits you said you were going to get when you justified purchasing the software in the first place.
Yeah.
Right? How many companies actually do that? I think everybody's challenged to make sure you actually get the benefits that you use on your cost justification sheet to put the software in the first place. Because then once you put it in, you're off to doing something else. It looked good on paper the first time you put it in, but how many people actually go back to make sure that they're getting those benefits?
Yeah, the people that companies make money probably do
it. Well, yeah, that's true. But that's life. That's how business works. And there's always more projects, bigger fish to fry.
Yeah.
And in this particular case, if I was a company, and I always preferred to buy instead of build myself, and being in this particular industry, AI would not force me to change my thought process. I would still want to continue to be a buy first instead of a build first. AI is not going to change the equation, at least for me.
Interesting. That's good. Anything else you want to add to this chart, either of you?
I would just say the building part. If you're maybe even a larger company, if you're bigger than a medium-sized insurance company, you may be doing some buying. You may also be doing a lot of building. You may buy software as a base, but then modify the heck out of it because you think that gives you a competitive advantage, right, over your competitors. So in that case, anytime you're doing any building, well, I mean, this is a whole new territory, right? So everybody's got to figure out where are going to be the entry points to add the AI. What AI are they going to use? And I know you've got other slides here too about compliance challenges and other things like that. But then what AI are you going to use and whose are you going to license? And there's going to be a cost associated with that too, in addition to the learning curve for your own people to learn. So, I mean, you get all the headaches of building software from the design phase, all the way to the implementation phase. It could get messy. I mean, that's why this is probably the first question of this session. This is the $1 million question. And at the same time, I mean, if you look at, we're talking about adding AI now into existing, here this slide says legacy systems.
Yeah.
Well, you already have, every single year, companies are always trying to upgrade their systems. We still toss around legacy just to mean, to me, legacy is not a bad word. It's just older software, right? It doesn't mean that older software is still not providing the benefits that you originally envisioned. Heck, I'm sure companies are still right out there running COBOL programs that were originally written in 1959. They still work. Is it a legacy system? Sure, but that's not, I don't look at that as being bad. That just because it's old doesn't mean it needs to be replaced necessarily. But you got companies, it's kind of like when you look at AI here, because it's such a big topic, it's kind of like the board has changed, right? The game has changed.
It has, yeah.
Companies were already, they kind of knew what all the pieces were on the board, and they were already, playing the game. And then you toss in AI. It's like making a whole new chess piece and trying to put it onto the board, and it upsets the game plan and the strategy. So it's kind of like you got to go back to the beginning and look at everything all over again, which is probably what a lot of companies are doing.
That's interesting. It's very good. Prabir, anything else you want to add before we move to the next one?
I think we touched upon most of the scenarios, but if you look at that in your wording, you said AI and data solutions in the existing legacy system, right?
Yeah.
So legacy systems, Tom has already touched upon, because companies are already struggling to integrate the legacy systems with the other systems they have. Over the period of time, they organically added into the systems. So that challenge is already there. Now they are adding on AI on top of it. So that means, they continue to struggle between these two. But good news is that they would be doing that as a wrapper in front of all of these to implement whichever area or challenge they can repeatedly use the services and replace that with those AI components. So only the repeated side of the activities they can look for, and which we'll be talking about in the future slides about the use cases where they can get benefit of it.
And that ties in with your other comment about return, doesn't it? They got to find those repeatable use cases. That's good.
Right. Well, and that's an important topic. I know, Prabir, and we've talked about this in prior sessions like this. Making sure that you just can't add in, an AI feature. It's got to start with the data, and some of these legacy systems, if you want to call that, or anything that we buy or anything anybody has built up until now, they didn't anticipate AI. So it could be it's a reworking or a normalizing of the underlying databases, and you have to look at the data. So even those companies that are selling packaged software solutions, they're probably going back to the drawing board too, and there are some things they have to rewrite from the ground up.
Yep. Yeah, absolutely. All right, let's move to the next one. And this talks more about compliance issues and the other side, which Prabir, you already hinted at. How do regulatory compliance and data privacy considerations shape the implementation of AI and data solutions in the financial sector? And how do these companies navigate these challenges? So this is a big one. And I don't think you can, I think you got to kind of cook this along with the rest of it from the start. And if you're a financial institution, that's my guess.
Yeah, you want me to jump
in? Yeah,
I'll jump in.
Yeah.
So I was a certified information privacy professional in my last career. So I mean, everything, all software systems and processes, certainly you want to bake in privacy as much as you want to bake in security as well. Neither one of those topics can be an afterthought. When it comes to AI, I think you're really looking at what will be self-contained and what you have to go out of house to get as a third-party service. Things that are self-contained within an organization systems, from a privacy perspective, that's easier to control. Look at, when we're talking about AI, we look at it two different ways, right? First of all, AI is a personal productivity set of tools for employees, and then AI that we might build into back office processing systems. Mm-hmm. You can see already what's taking place on the personal productivity side, and you can read articles about privacy violations, and employees unknowingly sending a gigantic spreadsheet of data with PHI, protected health information, or PII out into a third party AI system, a large language model, to summarize it. Well, now they've just put this spreadsheet of sensitive private data really out there, and now you've got maybe a large language model using it to learn, and depending on how it's being used or what the licensing is, you're using your data to train a model that then could be unknowingly spit out to some other user of that same model.
Yeah.
So
If they
there you
just ask the
go.
right question by accident.
Right. So here, this is a huge concern on the personal productivity side. This is where
Yeah.
companies are probably running into hurdles over the last year because they want to take advantage of these tools, but at the same time, there needs to be training. You can't just turn somebody loose. It's just like Excel or Word or PowerPoint. Nobody's going to innately know how to use Word, Excel, or PowerPoint. They had to go through some training somewhere along the line. Sure, you could try to figure it out on your own, but that's where you run into problems. Same thing with the AI. People can figure it out. They are figuring it out, but after the cat's already been let out. So you can translate that now into what you might put into your back office systems. If it's more self-contained, and I think when any company's looking at one of their back office systems, all right, it's going to be more scrutinized than a personal productivity tool for an employee. So you definitely have to look at the security and the privacy, because then you're going to have, or you may have, compliance activities depending on what industry you're in. So you need to keep a tight grip on that one from the beginning.
It's good. All right, Prabir.
Yeah, I think the regulatory compliance and data privacy is not just only for financial institute, right? It is everywhere. It's a common problem for all industries.
Yeah.
Financial industries is specifically challenged because they are dealing with mostly the customer confidential data, because they cannot onboard any customer without having any confidential data, whether all the PII data. They cannot do anything. So they have more challenge than any other industry has. The questions comes in I think Tom laid out, is inside and out. I think I was looking at inside out, right? It's not just only outside customer, but there is also inside threat that people would be using this AI without having any guardrail, how they will be utilizing this, how they will be using their internal IP system, IP data, or whatever they are using in a day-to-day. And sometimes it might be confidential from one group of people to the other group of people internally. So those things would be a huge challenge. I think the CISO world, they're scratching their heads. I think there's so many discussions and meetings happening, not just only at the enterprise level, but also at the government level. How this information can be, because large language model is not restricted only one specific geography. Once your data is out, that's what the large language model is. Whichever geography they allow it to those informations to go, and they would be having that information. So, which Tom has put an example here, saying that if somebody is sending a personal PII information in a spreadsheet, they're thinking that, okay, these 5 people, and I'm sending to an individual who is the partner company, and that partner company using another applications which is the AI based. Even though your company has not done an AI, that company might be doing the AI, and that AI incidentally in sending outside of their partner, even though you have a licensing with them and contract with them. So what will happen? That information goes outside of the geography, and it's outside. It's basically staying in the dark web, and that dark web will be becoming more and more. They will be more, I would say, enriched with all this information, whereas your company will lose their own IP.
That is an excellent point, Prabir.
That's huge.
Third party risk management, third party vendor management. Everybody was already starting to get better at that, I think, over the last 5 years. I mean, once everybody realizes that half of the data breaches don't necessarily occur with the company whose data it is. Everybody partners with somebody. 50% of the data breaches come from your vendors, your partners. So we spent a lot of time looking at third-party vendor cybersecurity and privacy controls. This adds a whole nother section everybody needs to be asking their vendors about. What are you doing? What kept me up at night as a CSO and a CPO back in the day was not necessarily the processes that we had in the company. Which of my vendors and providers am I sending data to that maybe I don't even know that they're sending it on to somebody else?
Yeah, exactly. Gosh, this is such a huge issue. I mean, you could just have like a contractor that comes in, one person comes in, and it's just like you said, Prabir, they could be totally used to using ChatGPT or any of these tools, or what's the Microsoft one, Pilot, and they put the spreadsheet in there because it could just be how they're doing their work nowadays, and
That's right.
Yep.
yeah, they could just maybe not be, what's it called? White room, where you have to separate where you separate, they could just be not following basic fundamental, techniques.
Right.
And all of a sudden your data's out there just because they cleaned up a spreadsheet for you or did an analysis for you.
That's exactly right. So
it
now
could be the auditors even. It could be the auditors doing this by mistake.
That's right. Yeah. The employees using AI at one of your vendors.
Yeah.
Right. And not taking all this into account yet. Yeah. This is pulling on a thread, lots of threads.
Yes. You gotta wonder, man. Let's see. It's like that commercial, that Halloween commercial. I forget what it is. I forget what the commercial is. I may edit this out. We'll see how it works. But there's a commercial where they're talking about making bad decisions, and there's this group of kids that are like out there, and they're like, "Should we go do this? Should we go do this?" And there's like a garage with all these like chainsaws and everything. Have you seen that one?
I have not seen that.
It's hilarious. And they say, "Hey, let's hide behind the chainsaw." And then they see the guy in the mask. That's just like, they have their car right there. They could have just gone to. So, anyways, back to outcome.
There are dangers lurking everywhere. There you go.
There are dangers lurking. Yeah, there are. You got to look out for them, and you got to be smart about them. And it's, you can't be 100%, but you want to do what's prudent, right? And what's in the bounds, or, I'm not a lawyer, but what's in the range of
and that's it.
Responsibility.
That's it, Alex. If you can just do what's commercially reasonable and prudent, then you're covering yourself, and the 80-20 rule will apply. But the downside could be really, really down.
Yeah, that's right. All right, well, let's move on. Let's go specifically into the insurance area, because Tom, that's really your it's really where you really zeroed in on for many years.
Yeah.
And over at Christian Brothers Services, I mean, that's a big part of what they do over there.
Right.
So how is AI and data-driven analytics reshaping the underwriting process and claims management as examples? You might, if you want to pull another example out, go ahead.
I think what you're going to see in insurance and financial services companies is the main benefit of AI is going to be its ability to help companies work smarter, not harder, because AI really has the ability to process and analyze large data sets very quickly, much more quickly than existing systems combined with existing staff can do. And when you're processing that, AI is also going to be looking for patterns, right? If you're on the underwriting, let's use underwriting for example.
Yeah.
Here in underwriting, you've got underwriters taking in a large amount of data, especially on commercial insurance lines. I don't care if it's auto or property or whatever it might be. Those customers or prospective customers are sending in a large amount of data that needs to be analyzed and reviewed. And what's an underwriter doing? They're looking to try to decide, is this a good risk or a bad risk to underwrite? And of course, they always want more data. The more data they have, the more comfortable an underwriter is going to be in setting a rate or a price to provide coverage, right? So I think I would hope all underwriters, insurance companies are looking here with AI. You can process that data faster, but you can probably also ask for more data. Rather than just 1 or 2 years of experience, hey, they're going to ask for the moon, because now they could use their AI tools to process even more data.
That's right. That's a good
quicker
point.
So they might ask you for more. They only ask you now just to kind of get, but the more data they have, the more science it becomes instead of art. Underwriting is probably still a mix of art and science, but companies want to take the art out of it.
That's a really interesting insight. I hadn't thought of that because they can process more information, they're going to ask for more.
There you go. I think
you're probably right. Prabir?
Yeah, I think that's the key things, right? Insurance company whatever the information they have, they always rely on some of the external information, always. Whether it is coming to assessing any risk around the weather change or climate change with that impact on certain region of, you probably hear that in California, some of the companies coming out of California because of the fires happening there, right? And same thing is happening in other parts of the world. So they rely on a lot of external information, external data. And this AI and the tools, which is brings them access to those data very easily, quickly, right? And so that's the very, I would say, add-on advantage of having those AI tools and technology implemented within their process when they are determining the risk or clearing out some of the claims of the informations. These are all really, really helpful for them to improve their productivity. Given the fact that, which we talked before, all the other challenges of not giving up their own information outside, right? Rather, use those informations which is available in various forms. It can be a proprietary information or anything like that, which they used to do. But now they would be using that the same way which they used to do, but they will be using it in a larger scale and large volume within the similar time frame. Right? So these are all really, really helpful for those insurance companies to improve their productivity, reduce their downtime, reduce their claims, so that the customer will be happy. At the same time, I'll talk about later, the customer will be unhappy also in certain time, because when they would be seeing because of usage, they will be seeing their increase of the insurance premium cost 30%, 40%, sometimes 1,000%, 100%.
So why is that? Because the data is better and they're going to correct whatever guesses they're making now, or what are you saying?
Because now they are looking at the comprehensive information, right? So let's, for example, Illinois might not have all the impacts which California have from the climate-wise, but now since they are looking at a risk across the board, so it's the risk of the California somehow spills into the Illinois. So Illinois is taking the increase of their business premium, which they are not supposed to get that one because they are not impacted on that. But now since because your comprehensive data is available, so risk is now, which is the best logic of being the insurance company to distribute the risk with the masses so that everybody can benefit of the right. So now so you will see the pocket of the customers would not be happy, just like, age-wise, people who is the older age, they're prone to have less accident of the car versus who is the younger driver.
Oh, that makes sense.
So all these things would be spreading across the board. So some people will be happy, some people may not be happy.
Makes a lot of sense.
Yeah, it is a good point, because of the external factors could be taken into account here much more easily as well. Instead of just asking customers to provide more data, the AI can also bring into the equation the external factors.
It's interesting when I first read this question, and Tom, I'm not an insurance guy. I'm just a customer, right? But I've talked to people that worked at some of the other insurance companies, and when I first asked them about changes, I keep hearing about the front end, the customer experience, and we delve into the back end just now, maybe because of the way the question is phrased. But it seems to me on the claims management that you're going to see a lot more of these bots managing that front end with the customer. I mean, it's already happening. You take the picture of the vendor, they send it in, and like 10 minutes later, you got your check or whatever. Does that make sense, that you're just going to see more and more of that customer facing or customer experience being I'll use the word enhanced with quotes.
Sure. Yeah. I mean, we've covered this in the past too. The three main business drivers to add improved software. Anything you can do to improve customer service is good. Anything you can do to improve operational efficiency, squeeze costs from the system is good.
Yeah.
And then, of course, anything you can do to improve your overall effectiveness, working smarter, not harder, is good. From a customer perspective, sure. I would prefer to provide as much data as an insurance company would want, because I think I'm a good risk. The more that they have,
that's a good point.
Take the art out of it, take the guessing out of it. I am a good risk. My data will show you that I'm a good risk, so I get a better rate.
That's a good point.
Right. And when I do have to file a claim, I don't care if it's healthcare or property and casualty, whatever it is, I want you to process it quickly and fairly, and give me my, either get that claim paid or send me a check.
That's a selling point. I mean,
absolutely is a selling point.
Which is, you're going to only get charged what makes sense for you in your situation. You're not going to. So it's the counter to what Prabir is saying, which will happen, is they're going to spread the risk of, like, California over to Illinois. Some companies will be able to say, hey, because of our use of these more advanced systems, you only pay for what you should pay for. It's almost like, we used to live in a couple of really nice neighborhoods. And when we had kids, we would always vote yes for education. Truth be told, I kept voting for education, but we talked about it, right? Because it helps, it's good for the kids, and it helps, you hope, and it raises the price of the real estate around you, but it's the same kind of thing, right? If your kids are out of the house, you do think twice about, does that referendum really need to happen? So it's a similar kind of thing. All right, let's move on. The next question is, what are the main challenges insurance companies face in adopting AI and data solutions, and how are they overcoming these barriers to drive innovation? And I'm going to add, that maybe something that's unique to insurance that we didn't cover in the general financial services area.
Because all of that still applies. Everything that we covered in that first opening slide, that definitely applies here. I don't know what would be unique to insurance. Prabir, do you have any?
I would say that interest. We touched upon these basic things, that having the external informations coming to the insurance industry would be very helpful for their decision making, or their other, improving the production, operational efficiency. Now the question is from where the data is coming, right? If the data is coming to them using the AI and have fallen into all the AI itself has a barrier about the biasness of the information. And all those things coming in, then you will be seeing the bad results within their operational
That's a really
decisions.
Good point. Yeah.
So those are the challenges they will be facing in, and to determine that how the good data is coming in their systems from outside world. For example, let's say I think some of the operational efficiency we looked at it is I was actually looking at one of the news other day.
Yeah.
And it's kind of stunning to me that one of the individuals, he claimed the insurance that he got attacked by the bear in a deserted place.
Yeah, right.
And did you see that, Tom? That news?
I did.
I didn't see that. What? Yeah. Go on with the story.
Yeah, and that insurance company found out that that's actually not a real bear. It's basically somebody is in the bear's costume, and they staged that whole things. So these are the good things, right? These are the good things that insurance company would be able to do through this AI, and very quickly.
Wait, the AI helped them figure out, was it a real bear?
I think so, because they had now able to do the very quickly process those images and show the anomaly around it, that is this image really a bear image or not, right? So they figured out very quickly. Now
I'm so upset, Prabir. I got my bear outfit right there. I was ready to do that this afternoon. Go on.
Yeah, so those are real advantages, right? But when they are doing the AI, and now if they see that I'm not bringing anything, culturally, if they're, let's say, medical companies, and if they find out that a specific ethnic group or specific, they are having more prone to certain kind of disease and things like that, if that used to process and determine that how the premium would be for that group, that would be more challenging, because those kind of biasness has to be removed on the system, from the systems. So that I would say that more of those area challenge the insurance company will be facing when they will be dealing with the external data.
Interesting. Mm-hmm. I hadn't even thought of that, but you're right. I mean, it's just I think that, you hear about what is it called, deep fakes, and we see the videos with there's one circulating now with all the different politicians across the world. They're dancing and doing all these crazy things, and it's people superimpose their face and their body on other people dancing or whatever. I don't know how they made it. It was pretty fun, but you could see how people are going to be doing more and more of these fakes using AI actually. Yeah. So that's a really interesting insight, Prabir. That's really interesting insight. All right, let's move on. And we've got a chart here. In the interest of time, we've got a chart here that's use cases. And let's just go through each one and any quick comments you want to make about these for the insurance company. Again, I got this list from our good friend and my personal assistant, ChatGPT. Where I asked, what are some valid use cases? Why don't you all give us your insights on each of these? We'll start with claims. We'll do quick answers, quick comments, and we'll get through this. So go ahead. We'll do one at a time. Go ahead. Claims automation, fraud detection.
Claims automation, fraud detection. If you look back 30 years ago, customers were happy if they can submit a medical claim and have it processed in 45 days. Speed is everything. Customer service speed and faster processing means better customer service. So you want to be able to do that. But what's funny thing that's happened also over the last 30 years is most healthcare companies, even I won't say property and casualty, but healthcare claims now are being processed by the system automatically as it is now without AI. It's only those claims that are very complicated actually have to go to a claims examiner. And of course, nobody really does any claims data entry anymore. All the providers submit everything electronically, thanks to HIPAA. So claims come in electronically already. That helps the system. If it has enough information to pay the claim, it pays the claim right on the spot. And it's only the more complicated ones that go to the claims examiners. Now, so with AI, if it's a complicated claim going to a claims examiner, there is a large body of data there, and something could easily be missed anytime you introduce the human factor. So here AI now could potentially change a claims examiner's job, and it might be you have one claims examiner that's managing multiple claims processing bots in the future. But I think the AI will be able to analyze that complex claims, which are going to be your huge dollar amounts too, and root out errors, either in submission errors from providers, and decide how to get it paid and get it paid more quickly. So I think that's a definite win for insurance companies and also their customers. And of course, fraud detection, that's just the AI can just process and analyze large amounts of data looking for suspicious patterns. So it can help. Fraud detection is not anything new, right? That's all. That's the quick answer.
That's great, Tom. Prabir?
I think he did. Tom touched all of them, right? We spoke about how companies are using the fraud detections easily through the bare example which you gave it, right?
Love that. Yeah.
But if you look at the core things for the claims automations, claims is totally dependent on the facts of whether it is a property and casualty or medicals. It all depends on the facts. Like it's a lot of images. It's like optical recognitions, which you call, right? That's OCR. So a lot of photos, a lot of images, a lot of videos. a lot of documents and all those things. And those things require a really good people, which used to be doing these things manually, right? Manually taking long times, even though we improved some of the processing before. But now with the AI, which they can instantly look at and compare the different patterns, whether the patterns is that between the two who is claiming and who is providing the services of those solutions, and looking at the patterns, how these it's not beyond that particular claim. Who is submit the claim. It's beyond the claims, the entire ecosystems. They can look at it whether this collision center how they are actually handling those claims. They can also figure it out, whether there is a pattern of the collision centers charging to the customer, which in turn is going to the insurance company to pay for it. Right? So they have all these informations they can now assemble together and analyze those OCR component through the AI and give the instant results very quickly. So those kind of automations they can make through from these informations which they cannot do it before.
Yeah.
And then during that process, they recognize different patterns to determine that whether this is a fraud or this is the legitimate claim. So that kind of, it's within the workflow, it can be built in that automations to determine the fraud. So I think they would be getting all those benefits. Yeah.
That's great. That's a great insight. All right, let's keep moving. Dynamic pricing and underwriting.
We kind of already covered underwriting and zeroing in on, what the actual cost is to help the insurer as well as the insured. But dynamic pricing, that's something new for the mix here. I don't know, as customers probably don't like the term dynamic pricing. You're used to seeing it now when you want to book a hotel room or fly an airline, and you log in 1 minute, you get this price. You log in 10 minutes later, you get a whole different price.
Yeah, I'm not sure that's going to fly.
And usually higher. No, the prices never seem to go down.
Yeah.
But when I think about dynamic pricing with insurers, I am thinking AI will help insurers keep tabs on their competitors. If you're in personal lines or commercial lines, you're going to be using bots that are combing over everybody's website, and for those websites that are taking submissions electronically, you're going to have bots feeding in case after case and seeing, hey, what is this insurance company A going to price this at? So if they can do that quicker, they're assessing their competition fast, and if they can get that back into their own systems, especially if they were being undercut, they can make. What do we say? We always say that data is just data. If you can, those companies who turn data into information and actionable insights from that data, those are the companies that are going to win.
That's great. I like that. Prabir?
Yeah, let me add these things, Tom. I do not know whether the companies are looking at the other companies' pricing, because they are all in the same network. They are the most lobbyist persons I know that insurance industry, right? They don't really when the pricing comes to high, they're all in the same boat. They don't want to reduce the price and get competitive. The area which I feel the dynamic pricing would be happening, I'm giving the example. So I don't know whether you guys have or not. I have a Tesla, right? And the insurance companies, they do not want to give the Tesla insurance. And I had the insurance company, I don't want to give the name. That insurance company was having the Tesla insurance. They sent me a letter that, hey, after this, we are not renewing your Tesla insurance.
Really?
Right? I don't know why. What's the reason behind it? But anyway, they might have a reason. Now I have to find the other insurance company who can do that. But in the meantime, the Tesla, they do have the insurance also along with them. But their insurance is inbuilt within the Tesla systems, where it will automatically charge you what the insurance premium would be every month. So basically, they would be looking at how much you are driving it, how far you are driving it, blah, blah, the stuff. So they would be determining dynamically, creating the price of your premium, and you pay as you go. So this kind of change I would be seeing more and more and some of the already progressive, even though they are doing it, the similar things, the based on your behavior and patterns, they will look for dynamic pricing for the premium, just like how much is the demand for the airlines to jack up their price, creating the price. So it will be similar pattern, but not in the same way the other industry does. But insurance industry definitely looking into that, in doing the dynamic pricing and premiums for their customer.
And that's fine. Everybody should be willing to pay for what they use, right?
Right.
Here's an example. My father is 84 years old, and he now buys his car insurance by the mile because he doesn't travel.
He doesn't
except
drive that much.
to the grocery store. I didn't even know, even being in the insurance field, I didn't even know we offered something by the mile, a good old mileage miser program. So he only pays so many cents per mile, but he's happy because he's just paying for what he's using, right? So I guess you can consider that to be dynamic.
All right, let's keep moving. Risk prediction and management. Any insights there?
Anytime you want to predict the future, you have to rely on the data of the past to a large degree, and then look in an insurance company, and then of course look at your current customers and their risks. So I think if more these days, and with AI and the ability to continually process large amounts of data, looking for patterns, this could be something that can be done almost every day now, and insurance companies can adjust as they go along, and you're taking out some of the variables then, as opposed to if you just did it quarterly or try to predict the future once a year. You can do it now more often. The more often you do it, the more data points you get, and your accuracy would probably be better. So I would think AI is definitely a winner for predicting the future with insurance companies.
Yeah, I would think so too. Prabir, anything you want to add?
Most of the things I think Tom added. All insurance companies, they have tons of informations back 50, 60 years, whatever it may be.
Yeah.
Now, those things, they do have to process and things like that. But AI brought them in a massive, not only just processing of the informations, but organizing those informations collectively in a way that it can be reused over the period of time in future. So we don't have to go back and reprocess the entire things, because they can start from wherever they are getting their information extracted out. So because they will be doing the learning from that point onward. So that will reduce the management cost and other things, and they will get the better predictions of the risk.
Okay, that makes sense. All right, good.
And I do not know whether if you guys know that one, because they can simulate the data, right? Which is called the synthetic data. So they can simulate that what is going to be happening in California next year, how many fire they will be having, how close they are. So they can do the synthetic data creations based on the previous results, and that will be giving them the more predictions on the risk which they will be having in future.
That's very interesting. And they're already doing that now, right? I imagine.
Yes.
They have to be. Yeah.
Yeah, they are.
Yeah. Interesting. All right, last one. Customer segmentation and personalization.
Well, nobody would ever confuse me with a marketer or a sales guy. I don't know how customer segmentation might be affected. I think companies are generally pretty good at that now. But personalization, I mean, as a consumer or as a company wanted to tailor anything to their customers, again, AI can learn, the AI models can learn a lot about a person or a company, depending on who the customer is here. And the more any company knows, or the more patterns they recognize, the better they can answer questions from a customer or put out new or enhanced products and services for them to consider. Again, working smarter, not harder type of things. I mean, nothing crazy, but I mean, I hate it when a company wants to sell me something that, if they want to sell me Tesla insurance, well, I don't have a Tesla. You should know I don't have a Tesla, right? Things like that. So I think working smarter, not harder, can help in personalization. But again, I'm not a marketer or a sales guy.
Yeah. That makes sense, though, what you said. Prabir?
Yeah, that's true for every industry, right? When you are looking for the customers, and personalizations is key, and there is a big industry which is called customer data platform is constantly growing, and creating the personalizations. That's the main selling point for those companies to this insurance company or any other company. Hey, we'll do personalize your customers so that you will get the most of the return customers, or most keeping your customers for a longer period of time. And insurance companies is also doing the similar way. Just like Tom said, and you will get the five different emails from 5 different insurance company. Mine one is best, and this will give you already see that Liberty Insurance, what they're doing, pay what you use, just like Tom mentioned about his father's case.
That totally makes sense. All right, this has been great. Before we close out, any last comments or additional comments you want to make on this area?
I would add one thing. So during this segment, we talked about a lot of challenges and issues and things like that. The good news is that those challenges and issues is if the companies, the senior executives, or the C-suite people, boards think about that, they plan to get over those challenges, and their returns and things would be enormous strategically if they get over those challenges. And the challenges is nowhere different than other challenges they have, whether keeping employees, retentions, and all the stuff which they normally have. It is nothing different than, but if they have a strategically deal with these challenges, the returns is enormous. So I just throw you there positive side, and not all negative side of it.
That's
I would
insight.
agree. I would agree too. Although we surface lots of threads for people to pull on here, it seems like an exciting time, and the industry, the AI industry as a whole, is rapidly advancing, exponentially as compared to anything else. The investment continues to pour in, and I'd say it's an exciting time if I was in insurance and financial services, just to watch the products and the services evolve to the ultimate benefit, not only of the companies, but their customers.
Yeah, I think that's a great insight, Prabir, and an add on, Tom. So appreciate that. All right, well, guys, it's been awesome. Really appreciate your insights on some of the challenges and opportunities for using AI and data in the financial segment, and specifically we zeroed in on insurance. So we appreciate that. I'm sure we'll have another segment that we'll do soon for everybody. So thanks for your time. And just to close it out, everybody, don't forget, watching or listening, watch all of our videos at technologyexecutivesclub.com. And don't forget to listen to the podcast at Apple or Spotify under the name Technology Executives Review. And the YouTube channel is called Technology Executives Review also, which we just opened up. We just got to populate all the videos that we already have in there, which will get done soon. And don't forget to join our newsletter. We call it the Insiders Club, but I think we're just going to switch that to our newsletter. And that way you can be notified whenever we have new videos and podcasts, and you'll keep up to date. And if you want to get involved and be a regular on our media network, don't forget to ask us about our Board of Advisors program. The Board of Advisors is the Board of Advisors to the technology community at large. We've got viewers and listeners all over the country, actually all over the world now, and we're happy to do that for on behalf of everybody. And if you're interested, just book a discovery call on the site or reach out to me. Thank you, guys, Tom and Prabir. We appreciate you. And thank you for attending, everybody, and watching or listening. And I always like to close with, it's our honor to serve you and your team. Don't forget to visit us at technologyexecutivesclub.com.